Boom, baby, we're live. What is up, guys? Welcome to Tokyo Crypto Show, Season 2, Episode 159. The economy is bad, and Jerome Powell is wrong. Jerome Powell is the head of the Federal Reserve, which is not an actual government agency. It is a private company. We're going to talk about the Federal Reserve scam, why he's saying we should not cut rates, and why I believe we need to cut rates here on the Tokyo Crypto Show, Season 2. I'm joined by my panel of experts in multiple avenues of finance, investing, crypto markets, trading, charting, and so much more. Gentlemen, welcome, and thank you so much for being here tonight.
Thank you very much, John. Good to be here.
Hello. Oh, yeah, let's get it.
So, guys, we got some bad news that we already knew. And that's the economy is in the dumps. They under the Biden administration, they changed the definition of recession because that administration was about making everything fake and well, you know,
and gay, fake and gay.
Yeah. Here we are dealing with the bloodbath of that administration. And the markets have been kind of just chopping sideways, which technically is a good thing. But I think it's time for me to hand it over to the expert. That is Alex, the charts guy, all the way from Land Down Under. Alex,
g'day.
You are somebody I admire because you don't lose your mind often as I do. So let's see why you're so calm and collected.
So here is the Bitcoin yearly chart. So sometimes it helps just to zoom out and take a really sort of bird's eye look, and then we'll zoom in deeper. So we're going to look at the charts today, and we're also going to look at some updates from our good friend Bob Loukas as well.
Alex, if you raise your volume just a little bit, buddy, if you're possible.
Easy done. Hello, everyone.
Perfect.
So on our yearly chart here, we can see, at least starting from 2015, we have this sort of green, 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 red, green, 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 red, green, green, green. And here we are in that third green year. So this is in a 4-year cycle, this is the year where the top wants to come in. This is where we get the high, blow off top, all that goodness. So if we look at what these years have traditionally done, now I don't expect it to be the same as 2017 with its, nearly 1,600% increase on that bar. But if we look through, we can see that there's definitely a lot of juice coming in here, 150% in that year. And so this year, in terms of how we've gone, we've only actually moved 22%, and we've actually come back down, and we're only sitting about 10% up on the year. So really nothing much has happened yet. We've got our targets, which reach about sort of the $150,000, $180,000 region, but it can go even further. So things from just a general kind of how do the bars usually work out. This is the third year. This is the year we're looking for a top. So that's why we are looking for it. We're still on track for Q4. However, we are mindful that should we get a big, ridiculous mania launch towards sort of the middle of the year, so sometime in May, June has a top, then it might be a good idea to start reducing positions. So I'll bring it up a little bit later, but as a sort of a general thing, in a weekly cycle, we get like a 100% move. So if we close out this sort of weekly cycle, we finish end of February at about $90,000. If we move up about 80%, typically a weekly cycle is about 80% to 100% in terms of the move it makes from the bottom to the top. Then here at this $164,000 region, if we were to get this in the next sort of 14 weeks, 15 weeks, so end of May, June, then I personally, following advice from Bob, would be shaving off some positions. But at this stage, if we were to zoom in, we are still looking all good for our Q4 top. So we're just sort of playing it by ear this year in terms of taking it week by week. We have, we've had our time to be very, very aggressive with the risk, and now we are sort of just looking to collect on all that risk we've taken. So I would say I'm in a bit more of a conservative mindset this year, moving down from like hyper risk for the last 2 years. So here is our range that Bitcoin's currently in. We are still threading through this range. It's about 20% all up. That's great. That's usual what happens. So we are looking for some sort of end to this price action to come in at the end of the month. So about, the last week, somewhere around the 25th. So we might get a low. So don't panic if we get one big more like flush out. Chill. It's all normal. We're expecting a low. However, any launch up now, because we shouldn't be going up. So if we're breaking highs, if we break $100,000 now, then that means it's already finished. It wants to go up now. So we are fully expecting March to be fireworks season. And if we were to launch right now, then we're off. However, if we were to thread for another week and a half, 2 weeks, and just kind of come down, I would love to see like a big liquidation event, like just a huge candle bigger than this one here. Just a really where everyone like freaks the fuck out. And then price comes back up, closes nice and high, and then off we go and right off into the sunset. That would be very, very lovely. So that's what we're looking for Bitcoin. As far as Solana is concerned, similar story. We're just in this range here. So, you know, akin to Bitcoin, because as we've seen, the market is really Bitcoin at the moment. So if Bitcoin moves up, then anything else that is good and positive will move up. But until Bitcoin moves up, it won't really do anything. So I wholly expect, you know, another flush down here would be lovely. Otherwise, if Bitcoin shoots up, then we're off to the races. And, you know, I'm seeing, so the highest close we've ever had for Solana is 252, and the lowest close is 180 in this range. So, you know, we could go anywhere down 180, 168. That's more buying. I personally have been buying more. So I've been picking up between 180 to 194. So, you know, I'm still convicted. As we said, as I've been saying, like every week for the last 4, 5, 6 weeks, end of Feb is when time is up. And once time's up, price catches up. So that's when we should start a new weekly cycle, see a lot of positivity. If we go into March and we do not see positivity and we see breaking down, that's when we can start thinking, is the bull market in trouble? But that has not happened. So as far as we're concerned, or as far as I'm concerned at the very least, price is going to go sideways and then is going to go in March. So if we're seeing all-time highs, March, April, that's what we should be seeing in terms of where we're at in the cycle. So I'll share now just some stuff that was in some of Bob's private videos, but he's put it on X as well. So bit of a big chart. Let me know if you need me to zoom in a little bit more. But this is his general like monthly...
Zoom in because we're very unlegible. There you go. Thank you so much. We can't see the bottom. If there's what is the time frame?
Oh,
on
that's
this?
all right. I'll bring it back. So basically, this is let's see if we can zoom down there. There you go.
Is this the weekly?
This is the monthly chart. So this is his general movement. So
for
here
Bitcoin.
he's got for Bitcoin. So here he's got like the generic, and he's grabbed this from a previous move. What we should expect this year. This is by no means the 100% going to happen, but this is the most likely scenario at this stage in time to happen. So we can see that there is potential to get a little bit frothy up here in the high, sort of, or the mid 200,000s. However, here, if we're up in $160,000 region, we've like moved 80% up from whatever low we get in this weekly cycle conclusion in the next couple of weeks, then that's a good point to start shaving off, because from there we should get our 20% drop, and then really we've already captured a move all the way from down here all the way up. And so it's kind of like I'd rather collect all of this than worry and get chopped out over the last like 10-15%. So Bob is himself, if he's got on the side here, using the power of scrolling. So yeah, here we go. New weekly cycle starts at the end of this month, peaks in May, June. So that is this segment right here at about $160,000. So here's all his consistency. You can hop on his X account. If you're not following it, definitely recommend. It's really good. If you're a bit more serious, then I would recommend the Bitcoin Live trading service as well. So yeah, is a guarantee? Hell no, but this is just a good probability. And here he's got his little disclaimer. If we get the first portion of this type of move, say 90K to 160, he'd be selling half his stack there. In his private thing, he said at least half. So, you know, take from that what you will. But basically, we're looking pretty good at this current juncture. As we've been reiterating every week, price has not gone low enough to say the bull market is over. So we can only assume that this kind of movement is the most likely kind of movement. And I'm of the mind that because the rates are high as they are, that is why something like this would happen. So I think long-term for the economy, yes, we don't want these rates to be so high. However, I think for our purposes of wanting to blow up our asset prices so that we can dump on everyone else and ride off into the sunset, I think it's quite a positive thing. Here we go. As recently as 2 days ago, just yesterday, as has been the character of this Bitcoin bull market, the next leg up is likely to be violent and unforgiving to those second-guessing. So be positioned and sit back. I myself have been hitting up the gym, going golfing, just trading here and there, but mostly staying in positions or DCAing in. So now's not the time to be stressed out. Now is the time where we just sit tight and wait, which oftentimes can be one of the most difficult things to do. So in terms of the market, it's looking fine. It's looking good.
Looking real good. James, it's interesting because I don't think you and Alex talk that much offline outside of the chat, but you have a pretty similar, you were saying like we're going to see something by end of February as well, right? That's what you were saying.
I mean, it's just been consolidating, like Alex said, and it's kind of funny is how much that our analysis kind of mirrors, our independent analysis kind of mirrors what Bobby's saying, right? That he's saying that around 200 to 250 is what he's seeing end of 2025. He said he's going to start cashing out around 160. I think a few shows back, we said we're expecting kind of low end, maybe 200, high end 300. So I think we're like right in the same ballpark, right? So like, we've been discussing in our group chat, private group chat, that a lot of times you're going to be doing the sitting more than thinking. So 80% of trading is just sitting and managing your emotions. And that's what Bob's saying too. He said, hey, get your bags packed, get on the train. It's going to be leaving the station soon. Just sit tight and wait, right? So like Alex said, that's sometimes the hardest thing to do in this investing and trading game is just doing nothing, right? Sitting on your hands. But, like we were saying, everything looks good. Even on the weekly chart, that it's bullish. I think only time we penetrated, 30-day moving average in weekly chart was September, during the September, that long sideway action we had last year before it went from 60,000 to 100,000, 110,000. But since then, we've been just kind of flying high and just consolidating sideways, right? So I still think that we got probably another 2 weeks, 3 weeks before we hit the trend line, then jump back up to above 110 to 120. What do you think, Alex?
Yeah, 100%. It's just nothing's happening, and then it'll kick
off. You just gotta sit and wait. And I know, like Alex was saying, go do something else. Go touch grass. Go to the gym. Go fishing. I don't go snowboarding if you're in that kind of weather. Take your girlfriend out to eat. Valentine's Day. Just don't sit at home in front of a computer screen and look at the 5-minute chart, because that's going to drive you insane.
Yeah. And you guys gotta here's the thing: if you really want to make a change in your life and you really want to actually make some money, you got to listen to people smarter than you. When I made some mistakes in trading, James on the panel here recommended me to listen to a book, and I've started listening to it. And one of the things the book says is you have to wait for the market to be in a situation that is profitable. Right now, it's really not profitable unless you are like hardcore degenning 1 second trader chart, looking at all the meme coins pumping on pump fund and hyper scalping and looking at your computer like literally 10 to 14 hours a day, which is fun. I've done it before, but the average person doesn't have the time to sit there and do that. So one book that he's recommended, I'm not going to put the link in the chat for you guys, and it's a 6.5 hour book. And I'm saying, I understand nobody wants to hear it. Nobody wants to sit down and listen to a book. Nobody wants to do the right thing. But for those of you who do, you will make money. Okay. Everybody on this panel is very, very okay financially, just going to put it like that. And This is the book here, The Disciplined Trader book by Mark Douglas, and it is a great book. And especially if you have no experience, you should absolutely check this book out and listen to it, because like what James is saying, and going back real quick, because this is what they're saying exactly. I'm gonna pull up the daily chart here for Bitcoin, and I'm just gonna zoom out a little bit. Okay, what we're dealing with right now is if you just look at what's happening compared to, let's just go back to let's just say, for argument's sake, we'll go back to we'll go all the way back to August, right? So take a look at my screen real quick, folks, and you'll see exactly what I'm talking about. Now, what they're talking about is, this is what we mean when we say consolidation. When an asset is caught in a price range. See, it's not really going out above the price range. It's not really going down below the price range. It is just right here, consolidating, right? That's all it's doing, is consolidating. Now, when this is happening, you're either going to have, as Bob Loukas mentioned, and the trading experts on the panel, please correct me if I'm wrong. When this consistently happens, you're either going to have a violent move upwards or a violent move downwards. Correct?
Yep, that's right. That's right. Yep.
And then if you don't believe me, take a look here, because this is kind of like right here. This is like when the ETFs launched. You know, this is the rumors of the ETF launching was right around sorry, that was October. So you can see here, October, right? And then we were kind of ranging, and then the ETFs launched, they dumped a little bit, and then the money started pumping in, and boom. And then what happened after that is we peaked on here March 14th. That's when Bitcoin hit the all-time high, about 73,000. And then we ranged for literally, what was that?
7 months. 7 months. 8 months.
Yeah, we ranged for 7 months. And then out of nowhere, Trump wins, boom, violent upwards. So right now we're ranging. Now this ranging could go on for quite some time, but there is a violent move coming either upwards or downwards. And statistically speaking, mathematically speaking, chronologically speaking, because we are in a bull market, the probability of this breaking up, especially when every piece of crypto legislation news that's coming out lately has been positive. We are like, that's why they're saying get positioned now, because here's the thing too right now, right? I'm just going to kind of break the fourth wall. I've noticed that viewership is down. I've noticed that engagement is down. And I've noticed that quality of comments is down, and super chats are down as well. That's okay. But for you watching right now, you're the smart person, because now is the time to plant your seeds. Now, is there a risk of you losing the money? Absolutely. Do we know what's going to happen? Absolutely not. But we do know with the probability, what is the probability of something happening? And because of the circumstances governmentally, circumstances economically, and chronologically based upon the 4-year cycle, there is a chance that Bitcoin is going to go up again. And when it goes up, everything's going to be dragged up with it. Even fart coin. Okay. So that being said, we are,
shut up and take my money.
We're looking good. Real quick, Mike Anthony asked me a question earlier, and he said, is the bull run dead? As of now, no. Ondo price prediction, I don't think any of us here hold Ondo. We're not really doing price predictions on that, sorry, because the reality is nobody knows.
So one of the things I like to add is that when John said going sideways, what really happening underneath that fundamentally, when things are going sideways, what's happening is underlying security is getting changed hands, right? People are selling and people are buying. So the changing of hands are happening on the line, right? So when the market's going up, there's more buying than selling. When market's going down, there's more selling than buying. But on the sideways, there are changing of hands happening. So people are selling and people are buying, right? But that's almost at like an equilibrium. So the change of hands is happening, and that's a good thing, because you want the new money in, get the old money out, right? Because old money is probably in a profit-taking mode and saying that, hey, you know, I made 60,000 since I went in a year ago, so I'm going to cash out. Well, that gets the new money in who's ready to move, right? So moving sideways is actually a good thing, and that's at the point that you want to jump into the market, is while it's quiet and moving sideways, not when it's going up parabolically.
This is terrible. I've got to stop you right here. BG says, I'm going to put 2.5K in XRP and hopefully it doubles this month. So here's why you shouldn't do that. So I'm going to stop the show because I want to educate you real quick. Okay. So what you got to do is you need to understand, in order for that to double, the market cap needs to double. So statistically speaking, what you're thinking is going to happen is not going to happen. Here's why. All right, real quick. All you need to do is go to my favorite website in the world, comparemarketcap.com. I've got XRP up here. Okay, so on the ROI calculator, so currently the price of XRP is $2.47. You want it to double, which we'll just say a flat $5. Okay, so for it to double, we need to go from 142 billion market cap to basically 230. So like 300 billion. So you're expecting this market cap to double. So you're going to need billions and billions of dollars to flow into this just for you to make some profit. The probability of that happening, in my opinion, is not going to happen. Because if you just look at the history of XRP, guys, the only reason XRP is having any price movement is because of internal manipulation. This is not organic at all. I don't care what anybody says. It is not organic at all. And if you just look at the price history here, this is why you're going to absolutely lose money if you do that. Let's just go to all, okay? So this was in 2018, $2. 40-something cents. Last bull market did not make its previous all-time high, only made like $1 and change. And then now this was based upon some of the news about the case being dropped, and then also Trump winning, right? And it had a giant jump here. But I'm telling you, assuming that this is going to double in market cap, I am not a believer of XRP. And if you do any of the actual research, you can understand that this thing is a completely controlled token. The founders of XRP hold the majority of the XRP tokens. That's like buying a meme coin, and the top holder has like 40% of the coins. It is not a good investment. It's not a good move. And the probability of this doubling is, I think it's a bad investment, quite frankly.
Yeah, and about 60% of coins are circulating. So about 40% of coins are still locked. So there's a huge unlock. Again, I don't know the timetable. So would it be unlocked, by end of this year? Probably not. But just give you a heads up that there's still about, half of the supply that's still locked. So at some point, it's going to get unlocked, right? So the volume of circulating coins would double almost.
So be careful there, BG. And then right here says, hopefully it doubles. People like you are who people like us take money from in this market, because hope is not a strategy when it comes to investing. $2,000, $2,500 is a lot of money to lose in the crypto market, buddy. Do your research, pay attention, but like that is just a very bad plan in my opinion. Does anybody think that XRP is going to double in market cap?
I think it'll go up, but I don't know if it doubled though. I'm only way I can think of it is that they do ETF and people jump into ETF.
It would have to at XRP almost doubling, it would put it only $29 billion below Ethereum.
Well, the question becomes which has a higher probability of hitting the ETH market cap, Solana or XRP?
Right. I mean, my money's on Solana personally.
Yeah.
But I would add to what John just said. Don't put, if you're putting in 2,500, that's your savings into XRP, I would spread it. I mean, I would do like, $500 or $1,000 in Bitcoin, maybe, some Solana, some SUI, some XRP, right? Maybe pick up an AI coin a little bit here and there. Just pick maybe, 5 different assets instead of just dumping it all into XRP. You might not double it, but at least you'll kind of mitigate some of the downside risk.
Yeah. Real quick, we have Mike Anthony here with a $4.99 super chat, and he's saying, I got 80K all in Ondo. What does that look like 1 year from now? Bro, if I knew, I wouldn't be here. I wouldn't be here. I would not be here, you know?
I actually, full disclosure, I own like a little bit of Ondo. But Ondo comes with a kind of similar issue as XRP. I think one of the reason that Ondo went up higher this year was the whole theme of the RWA, real world asset tokenization. But it still has about 7 billion tokens that has to be unlocked. So there's a huge unlock coming. Again, I don't know the timetable, but it's going to get unlocked. And there was rumor of that BlackRock was working with Ondo behind the scene for some of their RWA stuff, but who knows? But if you got 80,000 in there, I will just watch it. I would watch it, and if you are in a decent profit, I will start cashing out. If you
when you guys say I got 80K all in Ondo, I need to know what was the price that you got in at. Like if you got
what's your portfolio? How big is that? What portion of portfolio is that? Right?
Yeah. What was the price that you bought Ondo at? Like, did you put $80,000 of Ondo on December 13th, the all-time high when it was $1.75? If that's the case, then you're down and you're cooked. We gotta hope for the best. Like, really, it's just hope at this point.
Yeah, and the other thing is like, hey, my total bag is $10 million, and I got 80K in Ondo. I'd be like, yeah, that's less than 10%, right? So. I wouldn't worry too much about it.
1 year from now is past when we expect the top. So
or 1%, I guess.
Alex, I don't know what happened, but your mic just like is completely like really, really like microscopic. And
okay.
And you're choppy as hell too. I don't know.
Mm-hmm.
But go ahead. Try again now. All
right. If we can hear me.
Yeah. Good.
Yeah. Yep. In 1 year, we'll be past the top. So whatever it gets to this year, it should be about 60-70% down. If you were to go like 12 months from now, exactly. Yeah. If you mean by that, by 1 year. So I'm not positive on anything next year. Post top.
No.
Get out. We can get back in, or of course, in a bear market low, but
yeah, I think that's a great point that I completely missed. I think unanimously, we all believe the bull market will be over this year, right? Show of hands. Yeah. So, So holding it last year, you're going to be negative. If you're that, I take it back. I do know it's going to happen. You're going to lose money. So make sure you're out of everything before Q4, or, a lot of you guys, I know you guys want to try and time the top. You're not going to time it. You're not. And if you do, you got lucky. But don't make that your plan, because you're going to lose a lot of money, guys. I see a lot of crypto influencers calling for like Ethereum going to go to $14,000. Ethereum is going to do crazy numbers. Like, do we dare pull up like I mean, I'll do it because I have my TradingView account open right now. Let's take a look at ETH BTC. Let's see it, because everybody's saying that it's finally bottomed out. It's finally bottomed out. Like this is the week that Ethereum's gonna turn around. So let's take a look. Again, like just got to be really sober with everything you're looking at, boys. Here we are. This is where people say we're finally turning it around. This little, you guys need to find a girlfriend that is as loyal as these ETH people are to Ethereum, because she will never leave you. In that case, this is what they're optimistic about right here. But if you just look at the overall picture, this is embarrassing. Honestly speaking, Vitalik is a fucking weirdo. I've met him in real life, guys. This guy is a very, very weird, strange guy. And this chart is just a perfect representation of how much of a weird guy he is and how much of just an abomination this entire project has been. I mean, talk about like being at the top of the world in 2021 because look, this is what you really want to see here. Like, this is what you want to see. This is going from the bear market of 2018. We're coming out, and then we bottom out here, and then boom. That's what you want to see. This was at the peak in 2021, right? And then I think this was November-ish. No, November. Oh yeah, November's here, right? This is when Ethereum peaked out. But then from there, if we just zoom back out, just like just a total, like when I just look at this chart, I just hear like it's just not good. Not good.
Well, you see recently there is like a big volume candle, which is great. That's usually like a low, but we've had those same big volume candles, and it was a low that lasted for about, a couple of weeks, and then it went lower. So we'll see what happens. I would say a low's in for at least the next few weeks, but it doesn't mean it's going to turn around. I'll wait until it turns around before I start looking at, is it worth getting in, basically.
It's not even worth wasting my time. ETH is cooked. I mean, the only thing, I'll go on record saying this right now, I think ETH is cooked. The only thing that is going to turn Ethereum around is just some sort of gigantic news and announcement. Like there's like nothing's going to turn. Like they need a massive and consistent inflow of billions of dollars for something to change and turn this thing around. And statistically speaking, I just don't think that's going to happen.
Yeah,
Alex,
it's like that. We need like some miracle.
Have you looked at Have you looked at the monthly ETH chart?
Oh, it's just general.
It looks like it's.
Let's have a look. At what point does it become self-harm if you were to hold it and look into it? Yeah, big. But hey, it got to the bottom of the range at August, so we'll see what happens.
You want to share? Go ahead, pull up for the audience to see.
Right, let's go. I haven't had this chart for a little while, so let's have a look, everyone. Wow. So yeah, we got this, high, not even the highest close. That's all the way back here in May last year, and then it's just kind of wet the bed, I guess. It's just not what you want to see, basically. We've got a lot of cryptos like Solana who have already made new all-time highs, and Ethereum is still well under, like all the way here, 30% or so down. In terms of the close, 22%. It's just nowhere near. And Ethereum hasn't had much inflation. It's supposed to deflate, but it hasn't. Hasn't had much inflation. So you sort of needed the same all-time high market cap to get the all-time high price, and we're just nowhere near. We're just nowhere near. This is not what we want to see. So I guess you could make the argument that this is now a range. But if Bitcoin is going to go up 80% in the next 6 months,
Mike, you have lost your mind. I don't know what price you had your sorry, but this guy, I'm holding my Ethereum. Dude, what is your entry point? And I have no idea why you are holding this, bro. This is alarming. I like that. If you watch this show consistently and you hold on to Ethereum and you're underwater and you're expecting things to turn it around, I don't even know why you bought 3 weeks ago. Because, yeah, bro. Okay, whatever. It's all good. Do your thing. I got to live to fucking 50. I can't get stressed out. Oh my God. What happened 3 weeks ago? Why did we buy 3 weeks ago? Let me look at the chart real quick. But anyways, kind of recentering the focus back on today's topic. The thing is, we're going to talk about what is going on with the economy, and James and Steve will be leading the charge. Alex and I will be running support on this topic here. Alex, of course, if you guys need some help about golf and stuff, he'll help you in the chat.
Planning about the Australian government.
Steve, you are actively working with a very successful traditional finance investment firm. You live and breathe TradFi. You are a very successful trader. I'm not going to go into details of it, but you are in the top 1% of traders in the world, all verifiable as well. go ahead and just give us a breakdown in regards to how the real state of the economy. And Jerome Powell's wrong, because Jerome Powell is saying our economy is robust and he wants to get inflation under 2%. And this is just a retarded fucking thing to try and do. It's a waste of time, correct?
It is a waste of time in my view. And the sad thing is, though, is that right now, under the current general consensus of all the chairs of the Federal Reserve, they are thinking of holding rates. However, I do expect a surprise towards the downside in new jobs growth and new jobs creation later this year. That will make them pretty much have to go back to cutting rates. I would expect the earliest possible rate cut to come around maybe June. It could be as long as out as September, however, meaning that in the long and the short of it, while I do think that Bitcoin will probably also jump higher around March based on the same charting predictions, I do think that the bull market on the whole is going to be more prolonged, more stagnated, and take a longer time to go all the way from the top to bottom, and it will not show the same level of sharpness in growth that we saw in 2021 as quickly. However, will we go higher than the prices in 2021? I fully expect to. Reason being is because the Federal Reserve announced its desire for quantitative easing in the summer. However, rounding back to your question, John, and I know we'll sort of have multiple points throughout this show, if we look at adjusted jobs numbers growth, no. The slowdown has been consistent. We've been seeing declining new jobs creation since 2022, and even month by month, it is clearly trending downward. They will have to intervene. And furthermore, even if you were to use the Federal Reserve's own numbers, they always tend to revise them lower much later on, showing that there's really greater weakness in the economy.
Yeah. So can you tell us real quick, Steve, and simplify it for the audience, okay?
Sure. Pardon.
No. You're doing great now, but just because I know what I'm requiring you to say is very complex, so just kind of simplify it. But why does Jerome Powell want to keep interest rates up, and why do we need them to go?
So the main reason for wanting to keep interest rates up is that inflation has not been going in the direction that they wanted to. The most recent inflation report, which was released today, came in hotter than expectations. We were expecting year-over-year inflation numbers to come in at 2.9%. However, January's figure came in at, unfortunately, at 3%. See, the Federal Reserve tries to restrict the amount of credit or money from loans in the economy by keeping rates higher for longer, right? The higher the interest rate is, the less people are able to take it out to use it for business purposes or personal purposes. This is why we have higher rates. However, on the flip side, if we want to, at the risk of creating more inflation, try to support the jobs market, we can cut rates because that will increase the amount of loans that are circulating or the amount of credit that's circulating in the economy, and in theory, spur greater economic activity supporting jobs. Right now, inflation's coming in high, at least per their figures. Reason being, I think they're misidentifying general inflation for the inflation that's been created by hikes in the price of gas in winter. See, every winter, every year, more people are going to be using liquid natural gas and natural gas in general to heat their homes and to heat spaces in general. The problem with this, though, is that when this hikes the price of gas, the price of everything else goes up. Thus, inflation in winter years, particularly actually in January, tends to be higher no matter what year it is or isn't, right? However, I for one at least believe that Jerome Powell is overreading into winter's inflation. It will clearly go back to falling inflation because the economy is not doing that great, and jobs will fall further. Thus, we'll almost have to see rate cuts, I would say, at the latest in September.
So we need them to cut the rates ASAP. Trump has been consistently calling for the rates to be cut as well. Right. But Jerome Powell answers to who?
Well, right now, at least per how it's set about by Congress, Jerome Powell only has to answer to himself. Now, they would have to do through a congressional act, which right now I think in the upper chamber, Congress holds the Republicans hold a slim majority. However, the amount of political willpower there is to pass a bill that would make interest rate cuts the decision of the executive or the presidency, I don't think is sufficient. There would be huge resistance to it. However, as we've seen in other developed economies around the world, including in Japan's last July, political pressure always exists. Public popularity always exists. If everybody's hating Jerome Powell and his team because they're not cutting rates, and if the Trump administration and other Republicans are saying, hey, cut the rates, they're going to be looked on extremely poorly by the public and the people who will lead our country. And that psychologically will create pressure for Jerome. However, unfortunately, legally speaking, he's only bound to himself and what his committee votes on.
Do you know what his annual salary is?
No, I don't know it off the top of my head. I can check though.
Yeah, I mean, because I think when you're like, he's clearly out of touch with the common person, and that's a big problem. James, you are currently invested in working in the TradFi industry yourself, and you had a bunch of information regarding the state of the economy. And if you want to send, I put those articles that you sent in the private chat. If you want, I don't know if you want to share. Real quick, just going back to Mike Hartman in the chat. So you said here, name recognition will help boost ETH, even though it's outdated. A lot of normies still see it as a very reliable coin. If that is the case, then why hasn't it happened already? And I just don't want my people watching to lose money on obvious plays that lose money. So this is I'm just going to show you. This is the year chart for Ethereum. Okay, it peaked out here. That was the highest it went. That was the day before Bitcoin hit its all-time high. Did we go higher here? Like we went higher by $1 here. Has not broken its previous all-time highs. So that's chart one. That's like not something you want to be looking or dealing with, quite frankly. When I look at this chart, I just think like, it can't get going, you know? This is Ethereum versus BTC, consistent downtrend. And then this is Ethereum versus Sol, also downtrend. Like every indicator out there is screaming, do not buy this asset. So what you're believing right now is your own personal emotions. And I do believe that you are getting information from another content creator that is influencing your decision, because this is a very bad decision. Okay.
To jump in really quickly.
Go ahead.
Sorry, I didn't mean to interrupt, but with the amount of general interest that has existed within crypto as an asset, especially throughout 2024 and 2023, and everybody and their mother being able to constantly see whenever they open any website that Ethereum's number 2, if it was going to gain, it would have gained by now.
Yeah,
I think if it was going to gain, it would have gained by now, and that hasn't. Like that name recognition point has always remained, as John said.
Yeah, and another thing, because a lot of people are saying, why are the Trump family buying it? That is World Liberty, whatever, World Liberty Finance, whatever the fuck it's called. Yeah, they're pushing ETH and everything, and they're buying ETH. But like I said, I don't know why. And when you are speculating in cryptocurrency, you have a higher probability of losing your money than gaining your money, right? Making money in cryptocurrency or traditional finance is 2 parts, right? And James, jump in if I'm wrong here, but it's 2 parts. I feel like rule number 1 is protect your capital, and rule number 2 is invest in things that are more consistent and guaranteed rather than hoping for something to happen. Am I wrong, guys? Panel?
No.
Yeah.
Oh, that's right. That's right.
Correct. Well, yes, you are correct.
Because remember, amateur traders always look for the profit, right? But professional traders look for the risk. If you take care of the risk and you're in the right asset, the profit will take care of itself. At that point, it's just a matter of how you take that profit or lock in your profit, right?
Yeah.
So, like John said, number 1 is
Japan
preservation of your capital. Because there's going to be always more opportunities down the road. But when you don't have any chips left, then how are you're not going to be able to take those opportunities? Yeah. So make sure you got your chip stack and protected. Then you take the asymmetrical bet, right? Which is low risk, higher reward, right? So when you're looking at something like ETH, SOL, BTC, we were looking while, Steve was doing his stuff, we kind of looked at ETH divided by BTC chart and ETH divided by SOL chart, right? And those both in long term are in downtrend, which means that ETH is underperforming BTC and Solana in long term, right? So sure, can you make money on ETH? Sure. But is there a better opportunity? We think so. We think the BTC and Solana is much better opportunity than ETH. Well, given that, if ETH price is going into trading range, well, sure, yeah, you could kind of say that you're kind of taking the risk off the thing since ETH price would be stabilized. But again, you're kind of saying, okay, well, then I'm going to kind of give up the upside for a little bit of risk control, right? So that's kind of that's where you're kind of have to look at your personal, trading philosophy and thesis, saying that, okay, am I leaving the profit on the table by sticking with a quote unquote safer asset versus, hopping on something that's faster horse in the race and maybe do, make more profit. But again, that's your personal judgment on that.
Yep. James, let's go. I'll tag you in straight to the comments we had about earlier with the economy being fake and all the nonsense. If you want to share any
Let me share my screen here.
Whenever you're ready, brother.
Okay. This was kind of funny, right? Can you see the screen?
Yep.
Kind of the timing was just great. I mean, it's I like to think of a synchronicity as God winking at you, right? So John came up with this topic about a day ago, or maybe 1 or 2 days ago. Then, I've been kind of searching through some news, see what we can kind of pull up. And we just came up with this article say, hey, the voters were right about the economy. The data was wrong. And this is written by Eugene Ludwick, who used to be a United States comptroller. So he worked behind the scene with the U.S. Treasury and Department of Commerce and kind of, running through our financial system and the Treasury. And here, the article pretty much talks about how data was manipulated by people in power in last administration, changing the definition of the data, right? They changed the definition of recession, and they changed the definition of inflation, and they changed the definition of who is unemployed. So was the data wrong? No, but the definition was inconsistent. So what was considered recession prior to the Biden administration is not same as how Biden administration defined the recession. Same with the unemployment, same with the inflation. So the gist of article is saying that we were in recession based on the old definition, pre-Biden definition. Then our inflation was much higher and our unemployment was much lower. So now kind of going back to what Steve was saying earlier, now this kind of puts Jerome Powell in a tough spot, right? So he has two of the mandate for the Federal Reserve is healthy employment and price control. So now he's kind of
happening. Neither are happening right now.
Either is happening. So now he's going to have to make some really tough choices as, hey, do I get the people employed by lowering the rates and stimulate the economy and providing capital to the economy, or try to keep the price control or the inflation down by keeping the rates where it is? I think what we have personally, I mean, my personal analysis is that we have inflation because we have not only because of the demand, I think because of the supply side. I think one of the things that really was telling is this other article that was Here it is. Okay, let me stop sharing and reshare. This was another article just popped up. Look at that. U.S. egg prices at record high. Why is that? Is it because of demand for the eggs are going up? No, because of the bird flu. There was a bird flu scare, and they killed a bunch of chickens and got rid of a bunch of eggs, right?
Mm-hmm.
Spike in egg price was bigger since the bird flu outbreak due to another bird flu outbreak, right? So I think what's happening was that since we did not see the demand come in earlier last year, I think the businesses have throttled down on their production for one reason or another. So remember, there's always two sides to the equation, right? Supply and demand. So inflation went up because we have the same amount of demand, but we have a lower supply of goods and services. And remember, the unemployment, our buddy Elon is putting a hurting on unemployment. He's just laying off federal workers left and right. So unemployment is, it's going to go up. It's not going to go down, right? And the other article here, let me see. The other things we think that, again, let's go back to our thesis, is that, hey, Jerome Powell's going to have to do one or two, right? Well, he could just sit still, but I don't think he can do that anymore. So I think either he's going to have to lower the rates to stimulate the economy and get people employed, or raise the rates to bring the inflation under control. But my thesis is that inflation is not due to the demand side, but the supply side, right? Then another thing that I think that we have to factor in for this whole, Fed funds rate question is this one.
Building suspense.
Guess what? About $3 trillion of U.S. Treasury debt has to be refinanced this year. That's about a 10%. We're in debt about $35 trillion, give or take. So nearly $3 trillion, 10% of U.S. national debt has to be refinanced. So think about that. When you let's say you want to refinance your car or a house, do you want to refinance it in a high interest environment, or you want the interest to be as low as possible, right? Because remember, the debt that we're talking about does not get paid. It's a carry debt. We carry it on the books and we pay interest on it. So currently we have a kind of historically high interest rate. And if we refinance it, and if Jerome Powell keeps the interest rate at current rate or even raise it and refinance $3 trillion of national debt, that's going to put more interest expense for our national budget, right? And that's not something I don't think either side of the aisle has political will for or appetite for, I guess. So that's another thing that kind of points me to say what Steve was saying was correct, is that I think he's just buying more time by keeping the interest rate where it is to see, hey, is this inflation print that just came in, was that a one-time thing, or is it going to be persistent and it's going to keep showing up? And if it is not persistent, then I think by Q2 this year, they're going to have to start lowering rates, because they will have to finance $3 trillion of debt or refinance it, and they want to do it at the lower interest rate as possible.
Yeah. I just don't understand what is going on, but I do to a degree. And this is why I think the general public is at an all-time high of hatred for the United States government and government in general. I'm pretty sure the Aussies down under hate the government. Yeah, is it all-time high?
Oh, absolutely. Absolutely. They've absolutely cooked the economy. It is ridiculous. They have spent all the money, and then they've borrowed more to spend more, and then they have gone and they've become the biggest employer. And all of the traditionally private enterprise kind of businesses, especially when it comes to real estate and building, they can't actually operate at any sort of profit because the government is just taking all of the resources, taking all of the employees and overpaying them. You'll have someone who stands there with a freaking lollipop sign, and they usually get like $40,000, $50,000 a year as an apprentice, and they're getting paid over $200,000 a year. And then they find that on their timesheets, they're working at 7 job sites without a break for 6 months straight and collecting all this money because they're just fudging the timesheets to steal the money. And then the union that's behind it, all of a sudden everyone gets kicked out, but they've already left with all the money. It's not there anymore. And then the whole kind of cycle repeats. So it's just ridiculous. And our interest rates have gone up like the fastest and most consistent than they've ever gone in sort of our history. Now they're starting to hold them because they did push them a bit too hard. But we've been having all of the, the big 4 banks, all the experts saying, they're going to lower it, this time in February next week. They've got another decision. And the experts are saying there's a 92% chance that they're going to lower the rates. But they've been saying this like every time for the last 2 years. And they've only increased the rates further. So it's a bit of like a battered wife syndrome kind of thing. It's a bit like an Ethereum holder kind of thing. It's just like, why do you guys keep on thinking that they're going to drop them when they go, we're not dropping them. Oh, you're going to do it this time. Oh, it's true. It's real. And then they don't. So I'm of the mind, though, that we are just in the time of the cycle before everything goes ridiculous in terms of asset price valuations, before it all falls over. And so to facilitate that bubble, we want the interest rates will just go higher. They will just go higher. They're not going to go down. If they go down, then there's a bit of extra time, I guess, before the big final top that we'll get in terms of, this is not crypto now, this is just like the general market. But there's usually this like ratcheting up of interest rates higher and higher and higher and higher until the whole thing just collapses in a big heap, and then they rapidly come down over a couple of years, and then we get a bottom, which is a great time to buy, but then the banks don't want to lend any money. So you kind of need to, get the money now and then put it away and just kind of sit in cash. Traditionally, hopefully we don't get anything too crazy where, the money just gets completely written off and everyone starts again. So we'll see how we go, but I don't think now's the time for the rates to come down. I think they're just going to, the most they can do is hold, I reckon. Hold or go.
One of the things that's like Elon even said that was that the government data has such a lag in it, right? So their decision making is always backward looking, and the system doesn't, think about U.S. economy. It's like a cruise ship, right? It doesn't just turn on a dime like a speedboat. So it has certain momentum, and whatever decision they make has to go through the system, all the way through the system. And because of that, there's another lag, right? Then there's a data collection lag, right? Then there's a decision lag. So there's just lag after lag. So there's no way they can make a real-time decision, And I think that's one of the big problems our government has, is that the system they use are so old that there's no way they can make a real-time decision or anywhere close to real-time decision. And kind of goes back to what Alex was saying. I think what's going to happen is that they're going to hold until maybe May, June. Then they're going to start lowering it to get the unemployment down. But that's what they will say. But I think what they want to lower it to so they can refinance this debt at a lower interest rate, right? But once they get the refinancing done, they're going to start jacking up the interest rate again to get the supposed inflation down. And I think that's going to whipsaw the market, right? And by 2026, I think the market's going to have a huge correction because of that whipsaw effect.
They are, the biggest thing is they're out of touch with the average person, and that is why the government, the United States government, and all governments in general are parasitic organisms, and they kill the host, which is the population of the country they live in.
Yeah. They don't make anything. It's a wealth transfer, right? Governments provide no wealth. It's a wealth transfer machine. They don't generate wealth.
Yeah, I was going to say we are the people are wealth generation and the government is wealth extraction.
And transfer
for sure. And I'm looking at stuff here. Jerome Powell's documented salary is $246,000 a year, but he's worth over $100 million. So he is clearly, I mean, they're separated. One says he's worth 50 million, the other one says he's 112 million.
You heard about Samantha Powers, the old head of USAID, right? She's making $250,000 a year. That was her salary, but her net worth went from like 6 million to 30 million in less than 2 years.
It's insane. That's insane. It is categorically and 1,000% insane.
Well, how is she like the best trader ever? I mean, what is going on there?
Nancy Pelosi 2.0. That's there.
Yeah.
Well,
Nancy Pelosi, greatest trader of our generation.
So, the point we're trying to make here is we absolutely, because what people didn't realize, okay, we had rate cuts in September. Markets started moving. Trump won in November. Markets started moving. Right after Trump won, they cut the rates again. We had compounding effect, and then we had rate cuts again in December. And all of that compounded into gigantic upwards price movement. And now that Trump's in the presidency, there's a certain large faction of governmental figures that are working together to undermine him, trying to get the economy going. And I watched Maxine Waters last night, and I was just losing it. I was in the bathtub with this Japanese girl, and I'm like naked screaming at the fucking YouTube on my fucking phone because Maxine Waters is saying like, this is because of Elon Musk, an unelected blah 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 coming in there and messing with government.
Wait a minute. Nobody elected Kamala to be the candidate for DNC because they didn't have a primary.
Yeah. And that's the biggest problem here. So another thing, just tying into everything as to why we are not moving. If you have been listening to me, you have been tracking the ETFs. And if you're tracking the ETFs, you know that the numbers have been abysmal compared to what was happening right after the election. So I'm just going to quickly share with you guys here. Okay. So if you take a look here, this is a 3-month chart. This is going to like pretty much right after Trump won the 11th. $1 billion in inflows here. Next day, 840. $500 million here. We had some outflow days here. $500 million, 307 million. But then again, just like if you look at throughout the week, you're having multiple $1 billion going in that week. This week looks like we had a little bit of down, but then firing back up in December. This is a multi-billion-dollar week. Again, here we have another multi-billion-dollar week. When the year started off, we started off strong here, and we were doing really well. But then since this was like the last good day we had. That was on the 21st of January, and then since then it's been incredibly abysmal, and just not looking so hot. So that's also tied in with everything. In addition to that, if you look at today's outflows, it was bad. It was very bad. I think everybody, Grayscale sold, Grayscale Mini ETF bought, but Bitwise sold, R Capital sold, Fidelity sold, and even BlackRock with a very small outflow. So everything is not looking so hot right now. But again, you have to understand, okay? I'm going to break it down in gym terms because we've got a massive male. I don't think there's a single woman watching us right now, actually. If you're a woman, can you... I think the only woman watching right now, I think the only woman watching right now is my mom. Okay. But my mom watches just a lot of my episodes. I love her. She's great. So the thing here is it's like the gym, right? Bitcoin just had multiple months of setting maxing out 300, maxing out 400 on the bench, maxing out 1,000 pounds on squat, whatever. you're going to need time to recover after you do those things. You can't just go to the gym and max out every day without having a time to recover and time to like let your body heal. Because you guys know, and then, you know, I got Lou, the lifting lawyer, is in the chat. You can't go to the gym and go super hard every single day in a row and not take time off. You will get injured. You will get a very, very, very bad injury, actually. Ask me how I know. I've ripped my pectoral. I've messed up my arm, messed up my knees. And what we're seeing right now, we are seeing a correction. It is arguably healthy because we have not dropped out of that range. However, right now, for you guys paying attention, watching right now, and this is the time that if we are going to have a violent move upwards in the future, which I think the panel is unanimously in agreement based upon the data that is given to us right now, we are predicting. I think we have probably 2 at max big movements left in us. Outside of that, me personally, I think we got 2 big ones left and then we're cooked. We're just kind of in this healthy consolidation, ranging motion, and moving forward, I don't know what's going to happen because nobody knows what's going to happen. But this is the time right now to either be in cash and or be acquiring, like Alex is acquiring slowly, if you do believe that we're having got some steam left in us. I think that, you know, on the panel, I'm the one who knows the most about meme coins, and the meme coin ecosystem was, you know, it was booming, but right now we're just seeing a lot of drama. We're seeing people hating Ansem. I hate Ansem. He's a huge character. I think the fact that Whiff is on the thumbnail here. Whiff was the golden child of meme coins, and Whiff is now trading sub $1. That is very bad in general for meme coins. I think the meme coin thing has been overblown and out of control. There's a lot of rugging. There's a lot of scamming. We accidentally uncovered a gigantic money laundering scheme that we found on the blockchain using Arkham. And I found this one. There's a group of people. I don't know who they are, but I have watched them launder $100 million in about 3 months' time. And I've watched this guy. It's honestly, it's terrifying to see this shit. I can't even believe I found this. So you got like, and this is why when the gentleman earlier was saying, I put $2,500 ready in XRP. This is not the environment right now to make money. This is the environment to plant your seeds in intelligent assets. And a lot of people, like I have friends in my life and stuff, they often ask me like, hey, you know, I want to get into crypto. They don't know shit. And they're like, I'm looking to make a quick 10 to 20x. I'm like, yeah, motherfucker, so am I. Let me know if you find one. You know? So that being said,
that's like saying, hey, you know, I never had a steady girlfriend.
Yeah.
But John, can you teach me how I can get to a Victoria's Secret fashion show after party and I like to get a threesome with 2 of the models?
Yeah. And she's got to be a virgin too. You know? Yeah. Yeah. For me, what am I looking for? I'm looking for, you know, not looking for much. Blonde hair, strong hairline, thick, nice hair, green eyes, luscious, big 34D tits, all natural, flat stomach, nice round ass, not too big, not like hip hop.
125 pounds.
You know, slender. She's got to love Trump. She's got to love God, and she can't have a body count over 3. So, like, you know, they're just growing on trees, right? Like, you know, just gonna go out there and get them. You know, it's the equivalent of like when we laugh at girls. We're like, yeah, I want a guy that's 6 foot tall, 6-pack abs, 6-inch dick, 6-figure salary, and he fucks me good every time, and I have an orgasm every time, and he only looks at me, and he only loves me, and no other girls are interested in him, and he pays for everything, and I can be fat, and I can have an OnlyFans, and I can do all these things, and I can be crazy and insufferable. Yeah, and I'm just looking for this guy, and we look at these girls, we're like, oh, okay, so you're crazy. Let's just fucking start there. And let's bring you back down to reality. And then they're like, oh, you know, crypto's a scam. This is bullshit. Like, no, you're out of touch with reality. Okay. What was that quote you always say, James, that Warren Buffett says about the jumping and the steps? Sorry, what was it? You put it in the
right here. He said, What did he say? He said, I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over.
Right. Right. You know, so you have to be, you guys cannot, and I'm still noticing this in the chat. Your intentions are well, and I admire the ambition, but you're like everybody on this panel, like when Steven talks to some of you guys check out mentally. I know it. All right. But when Steve talks, Steve is never like, I hope this. And you know, I saw that fucking Jerome Powell is a Pisces and we're in the age of Aquarius. So I don't know if, you know, and tomorrow's a full moon and I'm in my Mercury retrograde. No, he's like, here's the data. Here's the jobs reports. Here's the inflation. This is what's happening. This is the economic policy currently at hand. That's what you have to be diving into your life. If you want to make money, and James said it earlier, you have to live and breathe data. You have to live and breathe math and data. That was the first mistake I made, Charlie, partnering up with Tweedledee and Tweedledum. And we all know how that ended. So this time around, you've got to be grounded. You got to be, I look at HODL 15 Capital every single day. I pay more attention to cryptocurrency than I do pretty much anything in my life right now. I've even don't even take care of my dog to the extent I make girls take care of my dog, right? Because I am so dialed in from the moment I wake up. Literally, the moment I wake up, I am crypto news, economic news, what's going on in the government, what's going on internationally. The biggest thing, which I think one of the biggest catalysts that I think that can happen. Okay, here's what can save Ethereum. If Vladimir Putin and Trump come together and we're like, we have ended the war and it's because of Vitalik Buterin. Like, then fucking Ethereum is saved. Ethereum is saved, okay? But you want to be looking at these macro things. I think the whole Israel and Gaza thing is just a mess, but that war needs to stop, which it's not. It's going to stop temporarily, but these people have been killing each other since the dawn of time. And then the war in Ukraine has to stop in order for things to really, for the world to get on the same page of like, let's stop killing each other and let's all make money. And that's you have to look at the macro. You look at the macro, you look at the micro. When it is feasible to make money, you jump in, you make your money, and you get out. A lot of you guys are planned on getting in. You have plans to get in, you have no plans of getting out. And people who do have plans of getting out, they're the ones who take your money. So we all got to sober up and we got to be dialed in every single day, guys, every single day. I do not contact James and like, hey, James, who was this sports comment here, blah, blah, blah. Anytime I talk to James, it's like, James, what's going on with the market? What's going on with the market? What's going on with the market? All these guys. I don't call any of these guys for life advice. I don't call any of these guys and talk about anything other than what is going on with TradFi, what is going on in crypto. And if you want to make money in cryptocurrency, that is what you have to base your things in. When some of you guys are saying, and this is not a personal attack against anybody, but when some of you guys are saying, well, I heard XYZ creator, this is going to go up, right? My mom contacted me the other day and she's like, I want to sell all my Solana and I want to put it all into Doge because I think Doge is going to $1. I was like, okay, mom, let's break that down real quick. So what is the current market cap of Doge? Well, I don't know. What is the current circulating coin count of Doge? Well, I don't know. What is the market cap Doge needs to get to be to $1? Well, I don't know why you're attacking me like this. I'm just trying to make money. I'm not attacking you. I'm asking you logical questions, Mom, because I love you and I don't want you to lose money. And I don't want you watching us to lose money either. What money are we making from doing this show? This is a hobby. This is like, we genuinely on this platform, we love finance. We love TradFi. We love cryptocurrency. We are doing this literally. Well, okay. If you want to talk about it, here, I lie. I did it for this $4.99 super chat. I'll receive 70% of this money next month. So I've been busted. You guys caught me. I'm scamming for super chats, so it's just, you have to accept the consequence. You have to accept reality or accept the consequences for not accepting reality. In this context, if you don't accept reality, you don't accept the consequences. I mean, if you don't accept reality, the consequences of you not accepting reality is your money going to people like us, straight up. So That's all I got to say. Anybody else? Alex, you want to say something?
Nope. All's pretty good. I think. Oh, I guess one thing that was a bit earlier in the show was just about how, once again, just to not spend too much time on Ethereum, but it was like, oh, people still like it. It's going to make a comeback. What you're looking at there is you're trying to find like a fundamental analysis reason. And when we look at the technicals of the chart, it sort of tells us the story that we need to know. At the very least right now, it is an absolute shit show, and you shouldn't even bother with it. Now, you might think that there's some sort of fundamental reason, but until that fundamental reason, comes to fruition and then causes the chart to technically go up, it's kind of useless. So anyone who says, oh, man, like I'm more of like a fundamentals guy, that's just a bit of a cop-out, because that's not a thing. Like it's not a thing. You got to look at what the chart is telling you. The chart has all the information you really need to know about whether or not you should trade this, or whether or not you should buy this. Just look at the chart. It's got all the info there. And from there, you can go out and try and find all the data that supports your contention. And I recommend doing that. But starting from fundamental and just going, trust me, bro, even though all of the other information is saying it's a terrible idea, and this goes for any investment ever, just like, do not do fundamental analysis without technical analysis. Is just absolutely useless. That's the fundamental people are the ones who put all their money into Hex and the Richard Hart coins. And I'm sitting there going, oh, I'm going to buy some Richard Hart meme coins. And I'm like, what are you talking about? Like, this shit is down 98%. And they're sitting there celebrating, oh, it's pumped. And I look and it's pumped like 10% up from 98% down, which is fuck all. Like, people crazy. And so just to go, and I got people in there's a few other things in GameFi that I bought into, years ago as just sort of a bit of a lotto scratch ticket. And people are just sitting there being like, oh man, like I got a good feeling about this. It's great. Alluvium's looking so good. It's 99% down. It's so good. And I'm like, it's going to get to $2,000. And I'm just sitting there going, once again, the supply has inflated so much that to get to $2,000, it's worth like more than the entirety of the crypto market cap. Like, just people, just look at the chart. The chart is telling you. It's going, I'm a fucking bad idea. So cool. Great. That's all we need to know. We don't need to sit there and start like making guesses. Just wait until it shows you that it's going up and then get in. You don't have to be like, oh, and that's the problem with like Ethereum, Bitcoin, like trying to like pick the low. Like, don't pick a low. Wait for it to turn up and then you can get in. And you can get in with a really tight stop, because then it will want to go up. But right now, it is not going up. So just look at the chart. Look at the chart. As John says, look at the market cap. You can see, like, is this number realistic or not? Like, we can see it with XRP. Is $142 billion of market cap going to pour into XRP or not? What do we think? Well, if you compare, like, probably not, in my opinion, but you compare it to, will Bitcoin go up 80% to 100% this year? I think there's a good chance of that. So I would rather take the high likelihood chance of an 80% rise from whatever low we get in the next couple of weeks. I'd rather get an 80% up that I think is very, very high conviction than just kind of, let's just trust that the person who owns the majority of supply doesn't want to sell anything this year. Like, you're just completely abdicating all of your responsibility. You're completely you just kind of throwing your money out there. In which case, I'd say just go to the casino and just freaking put it all, do the double or nothing and just do that, because you'll probably have a better go of it than what you're doing currently. Because what you're doing currently is literally just giving your money away. You're just setting it on fire. So just like, look at the chart, and then you can start finding everything else. And that is I don't really have anything to say.
No, I mean, that's phenomenal. phenomenal addition to what we're saying here, because again, like I said, looking at everything we have here with the markets, looking at everything we have with the data, and looking at everything we have with the fundamentals as well, it's just oof. I mean, right now is not the move. Right now is not the move. And you got to chill. You got to really chill out. And you have to, like I said, you have to live and breathe the data. Okay, if you guys don't believe me, okay, when I talk about living and breathing data, okay, like, let me show you my phone. So this is my, if you can see at the top of my phone, it has the total crypto market cap, and then 3 coins is there as that I'm tracking. And then on my home screen as well, if you look here, what I'm tracking, I track Bitcoin, Solana, and I was tracking Popcat because it recently got listed on Coinbase, and we're looking at the data regarding that. And the only reason Popcat's moving is because it's going to be listed on Coinbase tomorrow with Pengu. So we have to. I'm gonna ban you, woman. But you guys, you got to really understand if your thesis, if your trading strategy is not heavily rooted in math and economic policy, statistically speaking, you're going to lose your money and a large amount of it. So we just don't want that to happen for you guys. We don't. That's like, we're not here telling you to sign up for Richard Hart meme coins or anything at all. We are just trying our damnedest to give you the most ethically sound advice possible. And if you're not getting data-driven decisions from us, it'll be unethical of us. And that's just not what we're all about. So we're going to leave you guys there. Thank you so much for watching us. Hit that like button, hit that subscribe button, sell all your Ethereum. I'll take responsibility for that. And yeah, we'll see you next time. Peace out.